Welcome everyone to the Kendall Report. It's Sunday night, and boy, do we have a lot to talk about. There's some interesting things going on. The planet remains an interesting place to be. I guess it's better to be on the planet than not, right? So, although I have friends and family that's ready to get on the ship with Elon and go to Mars. So maybe that is an alternative. Anyway, welcome everyone. Make sure you subscribe and like these videos. So let's go ahead and get into tonight's video. This is the end of March, and I titled this March Madness Ends, kind of a play on the college basketball, but it really has been madness. We've seen some crazy moves and a lot of things go on that we couldn't even imagine that were going to happen in this month of March, and it's coming to an end. We'll set this up in a minute. We're coming to what's potentially a big tipping point, and it's interesting that we've just watched this rally back. The S&P was up 1.8%, NASDAQ up 2%, and Russell was actually negative last week. So, but we're still negative on the year. NASDAQ is down 9.4 with the S&P down 4.7 year to date and 7.5 on the Russell. So markets are still negative. There's not really, I guess, a lot of, I talk about this in the past, not a lot of vig in the markets. Otherwise, not a lot of momentum. The last week seems like, last couple of weeks seems pretty robust, but in the end, it's really not. I was really anxious to see what our models were going to return this weekend. And wow, it was pretty much a dud, I will have to say. There's just not a lot of traction. There's not a lot of things turning around here, in spite of the short-term database has gotten a lot of traction. I'll go through all the details here in a minute. But let's just talk about this week and what's going on, and I have a little riff to talk about tonight. So this week we've got, really there's a couple of reports coming out on Monday. They're not significant. Tuesday, Case-Shiller, which is the housing index, expected to be up 18.2. I've been talking about this. Just a quick comment is the housing market is basically being driven by replacement costs new, not by demand at the moment. And while there's good demand on a lot of stuff, we've seen the market starting to pull back due to higher interest rates and just cost in general. But for the most part, this replacement cost new is driving the price, or otherwise, guess what? Inflation, right? And I guess if you're the Biden administration, you're trying to do anything and everything you can to avoid that. I'll talk about that in just a minute. But we got consumer confidence also coming out on Tuesday. That's supposed to come in around 106. I'm not sure anybody really cares about that. Wednesday is getting interesting because this is unemployment week, right? So we've got ADP coming out and GDP. ADP is expected to show 500,000 new jobs. GDP is the third revision, expected to show 7%. But meanwhile, the deflator is at 7.1. So, we're just seeing that inflationary pressures everywhere. On Thursday, we get the PCE numbers, and that supposedly is the Fed's sweet spot that they watch, right? That's the inflation number they like to watch. Expected to come in at 0.6. Year over year, 6.4. Maybe that comes in a little hotter. I always tell you I have to drive by truck stop here. We're printing $5 a gallon here right behind my office. And so we're still seeing a lot of upward pressure on these gas prices. And it doesn't look like that game's over just yet. And then so also on Thursday, we have claims. They've been coming down to 195. The continuing claims down to 1.3. So we're just seeing a continuation of that, of the contraction, things coming back to normal. And if you look at people in the administration, that's what they're focused on, is the employment situation. There's a lot of other stuff out there that's just breaking everywhere because they don't want to talk about inflation, that's for sure. PMI is also expected to come in on Friday, 58.5, and ISM manufacturing is going to come in at 57. Those are all expansionary numbers. So let's talk about what I think is getting interesting again. When you want to try to distract the public, what do? They're back to the BBB, Build Back Better, or some people have called it Build Back Broke, and now they want to go back to taxing billionaires at 20%. All of that rhetoric starting to come back. It's going to probably go nowhere. Nancy Pelosi, by the way, would fall in the targets of this. I think her net worth is around 118 million, anything over 100 million. So Nancy's going to have to pay 20. Let's see if she'll pass that one, right? Let's see what happens there. That'll be interesting. But as far as we go through this coming week, this is the final week, and I'm going to be talking about some key technical things that are going to be important. And this is the end of the first quarter as well. So on Thursday, we'll have the final trading day, and we'll see how this thing plays out. I've got some numbers. I've been mentioning them for a while. I'll go back through that again. We'll take a quick glance into the long-term view of the markets, and then we'll get into expectations for tomorrow and throughout the week. So let's go ahead and take a quick look at the database. So one of the things that was interesting here is that the weekly database, I was hoping that we'd get a little more traction. Maybe that would tell us that things are starting to turn around. We're still at 15.06. We did not get any traction at all. In fact, the weeklies had 528 buy signals, 121 sells. So absolutely nothing happening there. We go over to the daily and take a look at we'll take a quick look at the all stats page, which will give us a little more in-depth view of this. Daily's at 62.88. So we did see 632 buys, 151 sells. So this is positive for the short-term basis, but this is about where the database usually peaks out. This is it. So we're coming right up into a wall. We're coming right into some retracement numbers that I've been talking about for a while. So it just, everything's coming right into that inflection point that is going to be pretty serious. We like I said, we're just not seeing any kind of traction here. The short-term database, if I move over here, so you can see exactly what's going on with the shorter-term database. What you'll see here is we look at the models, we're only 6 days average duration. Fulfilled is nothing, so there's still a lot to go on a short-term database, but I think this is going to come down to the individual stocks rather than looking and trying to equate everything into an index. We're looking at right now that there's 10,211 stocks that are long in the database right now on a short-term basis. So it's about the 10,000 stocks. It's not about a couple indices. And I know all of us tend to focus in on the indexes and what the S&P and all these indexes are due. But in the end, it's about individual stocks. And there's still plenty of stocks that are rotating. I talked about this last couple of days, is that we are seeing there's some great trades coming out of the database. So on a short-term basis, we kind of have our 2020 trading hat on, which is to play the short-term models. And there's quite a bit left in those. As I said, there's only 6 days on average of an average holding around 40 days, and those are trading days. So that's a better part of 5 weeks. So there's still plenty of rotation to go here. But what we're likely to see when we start looking at the indices, there's going to be some challenges, I think, to maintaining any kind of trend when it comes to the indexes. Maybe we'll continue to see the rebound, but for the moment, it looks like we're trying to stall at these levels. Starting with the S&P 500, I've got the monthly graph up here, and I think this is important to understand. We're about to finish on a quarterly basis on the low. I'm going to show you a quarterly chart here, and every decline going back to 1972, 74, 2000, you name it, 08, every one of them have started off with a quarterly negative close. And we are, no matter pretty much what we're going to do, we're going to finish negative, I would suspect, when we look at it, because I believe 47.20, we'll look at that chart here in just a minute. But I just want to show you on the monthly, there's still a positive trend. We managed to get back above the we managed to get back above the 10-month moving average, which has a 0.79 current value, which tells us that the market, this is one of the things I talk about when using the PPMs, is that the probabilities to close under that 10-period moving average with a 0.80 on a monthly basis is only about 10%. And here we are trading right above it. Right now, that value is 44.66. So we'd have to drop, which is possible, about 60 points from where we're currently trading to get back under there. But it looks like we're going to at least finish that up. And we'll know on Friday morning when we come in what this value is going to look like on the futures and on the cash as far as the monthlies go. But let's go ahead and take a look at the weekly patterns, or I'm sorry, at the quarterly patterns. And this is a very long-term chart. I've shown you this before. We went through this, I think, last Sunday night, actually. And this is a long-term wave count. We've got five waves up here, all the way up. And like I said, here in 2000, we got this quarterly. We started with a negative quarter. We started that in 08. We also started that, if you can see where my cursor is right now, way over here in 1929. We can go over to 74. We had it again. This is something I've been watching very closely, and there's a key number here that is important, and we have actually not only just a negative quarter, but we have an outside bar. And I don't know if I can get tuned into this enough that I can get this on screen for you. But you'll see that we did make an all-time new high in this quarter, and we took out last quarter's low, and that is telling us that we've got an outside reversal. The number is 45.32, 45.34, right in that range. If on Thursday we close below that, that would confirm a reversal down. But as long as it closes lower, it would be best, I guess, for the ultimate negative pattern for it to be under this 32, 34 number. We'll just call it 32. If we finish there, then that's going to just confirm that we have a clear outside bar that would put us in that lower range of the quarter. It doesn't have to be there. Last quarter we closed at 47.66. So anything under 47.66 will be a negative quarter. I'm just saying from a technical standpoint, if we close under that level, under that 30 or 45.32 level, that's going to be a more of a confirmation. And I've told you this before, we won't know actually until the end of June. If we close lower in the month of June on a quarterly basis, then that's going to confirm, in my opinion, that we're going to get multiple quarters of negative numbers to come out. And I think when you look around and we just start to talk about what's going on here, I think it makes sense that something like this might unfold. Everything's kind of stretched out pretty good here. I know we'll have, like I said, we're going to get GDP numbers. They still look good, but we're still recovering. If you look at a lot of the metrics that are out there, we're still recovering to get back to where we were before 2020. There's a lot of things that have done well, but there's other things that have not, and we're just not fully recovered. So we're still in a recovery. You know, you hear a lot of stuff from government sources that they've created more jobs. They didn't actually create any jobs. The jobs just came back, and we're seeing, you know, that creation situation is kind of a phony metric, but it sounds good, right? Especially when you have 10% inflation. So, and gas prices at $5, $6 a barrel. And some of you in California and beyond, I'm sure some of the European folks watching this are thinking that's all. But, you know, we're kind of spoiled here in the U.S. having cheap oil, and we could still have it if we had the oil patch fully turned on. But the point of just talking about what we're going through right now, I'm going to go back and do the short-term analysis, but this long-term pattern is going to be all week long is what I'm going to be focusing in on as we come into Thursday, just to see how things go. But I think if you think about what we've seen, we've just played this big rally out. So let's go ahead and go back to and look at some of the other metrics here. Now remember, these are the trading view indicators. there's quite a bit of stuff that I have out there. We got Pattern Finder, we got all the indicators. So make sure, if you haven't done that, go to and sign that up. The link will be on screen here in a little bit. But as we go and take a look at back to the patterns here, let's flip over to a daily, and we look at the potential for tomorrow. We're right now down 14 1/4. The metrics for tomorrow probably going to be R1 45.51 would be the top. We were up at 40 earlier. S2 45.05, and we could get all the way back, start to come into these moving averages. 44.43 is the 10-period moving average here. It's underneath the action. We also have the 200-day at 44.58, so we could move back to the backside of some of these averages. The PPM1 is up at 0.81, which is a very bullish PPM. I mentioned this, and I have it up there on the screen, that we got a buy signal on 318 at 43.84. So we've got a couple 100-point profit in this last signal, and we've had a cluster of cycles come in, and so we still have, on a short-term basis, a very positive configuration. So let's take a look at the weekly. We've looked at monthly, the quarterly. So the weekly is also getting interesting. We're actually at a plus 0.32 on PPM1, which is trend mode. So we have an underlying trend, but the values are down at 44.03, and that's an accurate value being calculated real time. So that's where our major support is: 44.84 S1, S2 44.27. If we did R1 S1 this week, be 45.88, 44.84, be a 100-point range. But the positive PPMs are really good. The only thing that's not being, I guess, very convincing is the traction in the database, from the standpoint of getting some real traction, starting to see a lot of symbols come in on an intermediate basis. So that is just, that's a big problem for me, and that's going to keep me somewhat neutral, even though on a short-term basis, everything continues to look very positive. So looking at the weekly charts on the NASDAQ, we also have a positive PPM, but it's not in trend mode. And one of the things that I think is possible here on this weekly pattern is we're setting up a right shoulder. And I think the same situation is happening on the S&P futures, as well as potentially in all the major indexes, actually. So let me just draw in a quick pattern that we could start to set up here that will end up to be very negative. And I'm having the same problem I had the other night. I'm not sure why it's doing it. So I'm not going to be, I don't have my drawing tool, but what we're looking at is, with this reversal that we had a couple of weeks ago, we come up into these moving averages. PPM 2 is at a minus 0.52, and it's crossing over the 40. So that's going to be your major resistance point, which is going to put us around the 15,113, and the 10 is 14,251. So we're probably getting sandwiched in between those two values. So let's go to the daily. Daily has a similar pattern setting up. We got a buy on the 21st, not on the 18th. It's still long here. We have the 10 coming up at 1.16. So just like with the S&P futures, the NASDAQ is stronger on the short term than on the intermediate. So there's still a lot of overhead resistance. If we just stabilize here and we stay within that range I just talked about on the weekly chart, then that's probably going to be how it sets up for the week. I don't think we're just going to run away with the markets at this time. Yeah, we're not seeing acceleration in PPM2, PPM3. They're actually trying to roll over. The opposite is happening, and we're trading below the 200-day moving average as well. So expect to see the market just stay in this mode. We'll probably come into this 14,361 level, which would be a decent correction from here, but we're definitely starting to see the market's trying to roll over. Here is the futures on the Russell next, and we're seeing the same type of configuration. We've got a little uptick here on the 10-period moving average. It's interesting because this actually has been, from a pattern standpoint, been the leader, and it's suggesting that we've got 2053 is going to be the key number here. If we take out that number, that's also S2. So if we penetrate through S2 daily, that will set up a pattern that will suggest we'll go back to the 2023, 2021 levels. About that would put us down probably about another 3/4 of a point from current level to, percentage wise. So there's definitely still some sideways here. We got this cycle that came in a couple of days, and if we do close lower, the cycle was Friday. If we close lower, that number here is 2075. So we do get a lower close today. That should set up at least a short-term top on as far as the market goes. Let's go over to the cash just quickly and take a look at the weekly. The weekly, we got up to 2097. The close last week was just right at the RTX number on a weekly basis. The close was 2077. RTX was 20. Actually, it was closer. Hang on one second here. I'll get the right numbers here. Yeah, we closed at 2086. RXT was 2081. So we did get a weekly RXT sell. So we should come back into this pattern. The 10-period moving average on the weekly is still declining. So it looks like we're going to try to slide back. Maybe we're going to get that confirmation on the futures on the S&P for this quarterly sell. We'll see what happens over the next couple sessions. Next market we'll look at is the 10-year, and these numbers have just been completely off the map. We're sitting here at 2.5, really 2.492. We did get yet another RTX sell signal on a short-term basis, but we're just seeing these rates scream. And I did see somebody, I'll cover this in a minute, talk about how we're almost inverting on the 530. So there's definitely an awful lot of pressure coming in. That's probably why the Russell is not performing well. I've talked about this several times. There's about 25% of all the stocks are financial stocks in the Russell, and they're obviously small caps. And this is putting that's likely to keep a lot of pressure, especially if we do see an inversion. I'll show you the yield curve in a minute. But the PPMs here are screaming up, which means we're still in a big uptrend here on yields. We should come in at least to around the 2.36 level, something like that. We should try to flatten off here in the next couple of days. With all the news coming out, that probably will be something to watch for. Let's go to the weekly chart. Okay, this is the weekly, and we're looking at bear with me one second here. Yeah, so I had the weekly to start with, so that's what I was going through. I just want you to see the daily here. We're still getting these prints up, but we also got our XT sell on Friday on the daily, and that suggests that we should come into our S1, S2, which would be right at 244, possibility on a weekly coming back into 2.36. I'm just going to go to a monthly because I think this, since we're coming at the end of the month, this is absolutely insane. Look on the monthly chart. We have a PPM1 at plus 5.98, 6.98, and we're still negative on PPM3. But this is just suggesting that we're going to go into sideways range. We're likely to stay over 220 now. And if I've talked about these Fibonacci targets right now, 2.87, 3.16. 3.16 will start to potentially challenge those levels that we saw at the taper tantrum in 2018. So let's take a look at the yield curve now. And this is the daily on the 530. You can see how it's just plummeted. It's at 0.3, which is just a complete collapse of the yield curve. Let me just make this just a little bit longer here. Let's look at the weekly. Now you can see just how it's just in the last couple of weeks just fallen off. And we've taken out this over on the left-hand side where I have my cursor right now. That's the 2018 lows. Let me just bring up the monthly, and we are taking out the 2006 lows. The extreme was a minus 0.98. That's a pretty good inversion. That's 10 basis points. It's not 98 basis points. But that is where we're heading to, it looks like right now, if it takes that out. And we all know what happened. This was the peak in the housing prices here, and this was the beginning, coming into the beginning of the end. And then we saw this steepening here into all the way into 2010. But we look here at in February of 08, this is when Bear Stearns failed. All of this stuff was coming into play here, and we just saw the steepening of the yield curve. And we have to watch this very closely to see what type of patterns we're going to get in as far as the yield curve goes. Right now, as I've been talking about, there's no way to get around it, that this is projecting a recession. They're going to be, meaning the government's going to be talking about probably some good employment numbers and how everything's getting better and they're creating jobs. In the end, the inflation is just destroying the economy, and folks are really starting to feel the pain, I think, from the gas prices just across the board, right? Went out to a restaurant nice restaurant on Friday night, right? And I got these braised ribs, and it was one, and it was very expensive. I'm like, I actually asked the waiter, "Where's the rest of the meal?" And that's the kind of stuff. And I thought to myself, this is what the effects of inflation are, because these businesses are going, hey, we can't afford to do this. They don't want to change their prices, so they're downsizing all kinds of stuff, right? So that's what we're seeing in the real world. And I don't think it's going to change. It's going to get much worse before it gets better. Those of you who watched the channel for a while, you know, last year when they were talking about transitory, I'm like, no, this is not transitory. And then they blamed everything on the supply chain, and now we're just getting things to get continually worse. And I sure hope I'm trying to get to do a podcast with an old friend of mine. I'm hope I can get him to come on, because he is expert in the grains, and I would like to hear what David's got to say about that, and I think you folks would too. So I will do my best this week to make a contact. I've been a little too casual about making that happen, so I'm going to get a little more aggressive. But the bottom line is, what we're seeing here is all of these things. You know, now I guess the next scare level is they're telling you there's going to be food shortages, all kinds of stuff, you know, fertilizer, all of those things are just going crazy. So recession, sure, why not? Further inversion on the yield curve, why not? These are the things that are happening. So expecting, you know, I've been told on the channel that markets are just going to go up, you know, to the moon, all-time new highs coming. I don't think so. I think these markets all stall here. I think there's too many questions to be answered that can't be answered right now. I think the situation in Ukraine and other stuff is just making it way too uncertain that you can just move forward as if everything's going to be okay. I don't think that's going to work out. Okay, next market we'll cover is crude oil. Now, having said all that, here's the monthly crude. It's trying to come back in, and we're at 110.51. We traded up to about 114. I'll go through the shorter term view, but this is the monthly, and we're seeing this massive squeeze on the upside. The number to watch as we come into Thursday for crude oil is going to be RXT 109.77, so we're 110.57. A close above that will give us an RXT sell. Suggest we'll go sideways. Probably the magic number in this pattern will be the 200-month moving average, which is 109. Let me make sure I have the right number. 99.40. Yeah, 99.24. And that number will be probably the bottom end. So 100, between 100 and 114 is going to be the range that we're going to continue to work here. And that is, without a doubt, not a good number, because those are high enough that's going to keep everything very inflated. And with the numbers that we're getting this week with employment and all these numbers, PCE, this stuff is all looking in the rear view mirror. So if we look forward, things are likely to be even more inflated as we go forward here. Let's go to the weekly. Let's just go top down, starting at monthly. So here's the weekly. Last week, we were able to print up to 116.64. The 10-week is right at 99.19. Like I said, we're probably going to stay above 100. Right in that range is going to be the bottom end of this range. PPMs are trying to flatten out here, but they're still at a plus point or 2.98, 1.96, and 1.41. So monster intermediate trends here. These aren't going to bleed off very easily. And if you look at the market grid here, I was thinking that we might get more of a contraction. We did flatten out, but it's still a very large range right now. So we're trading just about right now. S1's 109, S2 104, S3 99.32. So that puts us right at that 10-week moving average. So that's probably going to be the range. Maybe an R1, S3, plenty of volatility here. we'll see how this all sets up. But that's going to be rock solid there with a ppm at 2.98. That's not likely to be penetrated and certainly won't close under that. Just a real quick look at the short term to see what's set up here. The short term is flattened off here. The support right now is at 107.30, 106.47. ppms are still positive, 0.86, 0.92 on ppm 1 and 2, and 0.69. Anything over 0.25 is bullish, and that just tells you that there's 60% probability that we're going to stay above these moving averages at least for the next couple of days. And so we'll have to watch this. This is the short-term view. So if we start to see the ppm start to bleed off a lot of this upward momentum, then we could trade down toward those numbers I just talked, around 99 or so. That's going to be it. But from a view of the oil sector and stocks, these stocks are likely to continue to do quite well because we're just seeing that there's just too much money to be made in fossil fuels right now, in spite of all the folks that want to be against them and you're supposed to buy an electric car and that's going to fix everything. It's not, and fossil fuels are very much not going away for a while, certainly not in the next few months, right? So let's go to next market. We'll take a look at gold here. This is the daily gold chart. We're continuing just to trade in this sideways range. We are seeing the ppms trying to turn up here. ppm 2 is cutting through its second derivative, and we're looking at the pattern here. There is some Fibonacci projections overhead at 2095. I'll show you the weekly chart because this is really the chart that we're going to have to watch here from that standpoint. So weekly chart is suggesting that I mentioned this number, 1900 is going to be your key support. You see 1900, you have to be a buyer at that level. And R1 this week is 1975 and S2 is 1908. That's probably your maximum range. If we don't take out S1 at 1932, then we'll probably have a potential of seeing something print up like above 1975, the potential of printing 2000 in this pattern. So this is a very bullish setup here on intermediate, and this trend is not going away anytime soon. In fact, there is the potential, as I showed you, for this to come up and take out that 2070 spike high that we made, but that's going to be weeks away. That's not going to happen overnight. Next market is Bitcoin. I've been talking about these numbers for the last week, and here we are, 46,857. We're trying to close above the 21 and 40 period moving average. They are 46,240, 46,177. So we're above those numbers. This is tonight, the weekly close. So if we close above this at midnight Eastern time, that's going to set up a potential move toward these Fibonacci projections, 62.3, 73.5, and 84.49 would be the extreme. Really what I'm looking for here is the setup that's going to retest those highs that we made last year around 65, 68,000. That looks like we may get a full retracement. I'll start to talk about some of the Fibonacci retracement values. For now, if we get this close tonight, this could be the beginning. You see all three ppms trying to turn up. ppm1 is actually positive 1.07. We still have to get some work, but once we close at midnight tonight, this should kick this ppm2 through its first or second derivative. ppm3 should also crank up. So we're starting to see this turn of this pattern. Ultimately, we just may be in this monster consolidation at, we'll call it 32,000 to 62,000, but we should start to move up toward these higher levels. Let's go over to the daily. Daily's trying to get an RTX sell signal. You got ppm1 1.83, 0.39, 0.20, so we're in trend mode. I talked about those cycles that came in 5 or 6 days ago. We're also printing up toward the 200-day moving average. So we close above 45,917. We're going to have about 2 days sideways. So this move that I'm talking about in the close that we get on a weekly doesn't mean we're just going straight up to 60,000, 65. That's not what I'm talking about here. But this is all setting up that all the resistance is being broken and all of these patterns are starting to move forward. Okay, folks, this is going to be the end of the broadcast. Those of you in the live room tomorrow, we'll see you there. If you're still interested, there's a link on the bottom of this page. You can go there, sign up for the indicators. You get a free month in the live room. We did some pretty good swing trades last Wednesday. We tend to focus on Wednesdays of just trading the E-minis and scalping and setting up swing trades. And then on Mondays and Thursdays, we have Mondays are typically educational days. So we'll be going through a lot of the indicators. I believe there's 8 indicators that we've released in this sequence. We're very close to releasing not only one more new indicator, but I'm hoping by the end of the week, first of next week, we'll also be on TradeStation as well. So anyway, folks, thanks again as always watching. We'll see you in the live room tomorrow. And those of you on YouTube, we'll see you tomorrow night. Thanks for watching.